Greetings to you all. Today we're going to be using the first block we get in Microsoft Excel. That was addition, multiplication, subtraction, and division. We are going to use this block to build a very important skill that all of us will need in order to survive as human beings, especially those who are planning to have families, those who are planning to go for expensive vacations, and everybody. So if it is your first time watching and you're not familiar with Microsoft Excel, you can go ahead and watch the first video that was shared a few years back, and we are going to continue. We are going to use those building blocks to build this skill that every human being needs, and we're going to be giving our Microsoft Excel a professional look so that we look like really professional financial planners. So in order to do that, you're going to open our Microsoft Excel and first give it a professional look. We are going to change our font to Arial. We are going to give it, it will depend on you, but I normally do a font of 9. So we are going to first select this, change this to Arial and make it 9 and give it a white background that looks professional, and change this column width to 1.2. And this is the first block of making our planning look professional. So for most people who use Excel, probably for business, probably you're familiar with this. So I see this didn't change. Just make sure everything changes. So we can go ahead and start our financial planning. So I'll be copying and copying text, since I already have the text copied somewhere, so that we can save time. And the first thing we are going to do that we use every day in financial plan in our daily life, we're going to first look at our daily expense. In order to plan financially well, we need to understand every single cent of coin that we spend, where does it go. So we are going to start by giving a heading of our monthly family bills and expenses. And among that, here we shall have expense. Bring that here. Here we shall have expense. Then here we shall have the amount of that particular expense. Here we shall have the amount of that particular expense. So depending on where on the particular expenses you have, whether you own a home, whether you have already built or we are renting, so you're going to be looking at general here, general things. So I'm going to start with rent for those who are renting, and I'm going to be using Ugandan shillings. So for those people who are having US dollars, rupees, euros, you can go ahead and put your amount of euros, doesn't matter. So you're just starting to plan something. So let us say we have a 250,000 rent, monthly rent. Then we are going to go to like the money we use every day for eating. So we're going to call that upkeep, and we are looking at it at a monthly period, so that we plan very well. So let us say you have a monthly upkeep maybe of 350,000. That is depending on your needs. You know, you have different needs, so this is just giving a rough estimate. Then let's say we have a water bill. No, you have to use water every day. A water bill of roughly I'll put 20,000. This is Ugandan shillings. So if you have in dollars, you can go ahead and put your bill in US dollars. Then we have electricity and electricity for those who are using electricity. Then for those who are using solar, you are well off, as electricity and data. For example, the one you're using to watch this is data. So for those who have fiber boxes, you can go ahead, you can split them. But for me, for as per now, I'll just combine them. Maybe so it is better to separate them so that you plan very well. So let us say on electricity you extravagant, you spend about like 25,000 on electricity. This is in Ugandan shillings. Then data depending on your service provider. Let us say you're using the least expensive data provider. That's roughly using 30,000. That is a few GBs a month. 1, 2, 3. Then you have some emergency. So you have to factor all this in so that you can plan very well. So we shall keep 100 for emergency. 1, 2, 3. So as I told you, this is in UGX. Let us make it look professional. So we shall do a total. So based on this expense, so we shall use our sum formula for those who have been following all along. We shall do the sum of this to give us our total, and to make it professional, we are going to make it bold, and we are going to put some borders. Just a bold border here, the top one, and there we go. It's professional. Then we shall merge these two. Then we shall give it a feel of blue and change the text to white so that it comes out very well. And we can center this. Okay, we can leave them. Just maybe center this. Oh, let me just keep them where you are. So here, looking at this, roughly you have this. This is your monthly bills and expenses. So in order to plan well, so now you're going to be looking at the annual bills. Your annual bills. So in financial planning, you're planning for everything. So you're going to be looking at the annual bills right now. That is something that you spend on money every year. This is once a year. So you're going to be having the same here, expense. Just copy this direct here and paste it here. So there are some things that you do annually, not every month. So let us say you have festive season. I'm a Christian. I'll put Xmas. So different seasons you have. You're Christian, Muslims, and other different regions. So here maybe you do a Christmas spending for your family. You do an additional maybe 250. This is an addition on that particular expense for that particular month. Then maybe you have a baby, you do baby shopping every year. You'd have your babies well figured out in your financial plans. Baby shopping, not sure. Maybe you make shopping for your babies like 200 every year. 200,000 every year. Then for those who have wives, maybe wife or your girlfriend, if you happen to have one, you can just make it short. Girlfriend. So how much money are you spending on your wife, girlfriend, or husband? If you're actually planning, you should also plan for your husband. Most of us don't just call it hobby. So how much are you willing to invest in them every year? So this is happening once a year. Say maybe you're giving them 300. Yeah, you're spending on your wife or girlfriend or husband 300 every year. So we shall also give it a professional look. Have I forgotten something? So you can go ahead and add it on if I have forgotten, but just giving a basic example of that. I'll keep this and make it white, and I'll merge and center. Then I'll make this and reduce the decimal points, and I'll give here a total. Total. So we shall go ahead with our sum formula. So and do our total here, and we shall just copy this formatting here and paste it here with paste special, then formats, and everything will be good to go. So this is for the expenses that we have annually, that it come once a year. Then beside those expenses that come once a year, maybe you may be having other expenses like one-time expenses that you plan to do, that happen one time. So we can go ahead and also plan for them here. One-time expense. Then we shall go ahead and copy this and put it here. So I don't know which the one-time expense that you need. Maybe you need to buy a TV, maybe furniture. To buy new furniture. This is a one-time expense for that particular year you're planning. Maybe you'll buy furniture maybe for 1.8 million. 1, 2, 3. 1, 2. That's 1.8 million. Then I don't know. Maybe you are planning to have a child. Maybe childbirth for that particular year. Childbirth, I don't know how much really roughly childbirth can be. So depending, maybe I'll put here maybe 3 million for childbirth. 1, 2, 3. So as I'm telling this an expense, we can go ahead and give this a professional look. Reduce those decimal places and go ahead. You can just copy this and just paste special here to make it quick and fast. Then we can do our total here. And do our sum. So after doing our sum, we know our total. We go ahead with our paste, copy and paste special to make formatting faster. Paste special, paste formats. So based on this, since we're looking at financial planning, you may be also having other your personal goals. So depending on where you're planning, so maybe you have personal goals. Let us add on there. So you have your personal goals. These are personal financial goals. These are your personal goals. So, but we shall be first mainly focus on this. Personal goals, you can go ahead and add them there. Maybe need to item and amount. Maybe you need to buy a plot of land. I don't know the price of land in your countries, but mainly in our country, land ranges maybe from 10 million, depending on where you're buying from, but residential land maybe about 10 million. 1, 2, 3, 4. Okay, I hope I have not made a mistake. This is 1 million. It had one more zero to to make 10 million. So this is a personal goal. So we shall paste special. No, as you see, we're giving our Excel a very good professional look, paste formats. So then we can go ahead and do our total. So since our total is there, we don't need to do the sum. So then we can copy this and paste special formats. And with that, we can say the first step is done. So as you can see, on a monthly basis, this particular plan we have made, somebody needs 775,000 to survive. Then on his particular annual expense, he needs 750,000. Then on his one-time expense, maybe for that particular year that he's planning for, he needs I put supposed to be 1.8. Then for this needs 4 million for that particular year that the person is planning for. Then for the personal goals, you can see this is needs to buy land. Somebody needs 10 million. So roughly looking at these are the key factors. This one times you can plan for them, but in order to make a financial plan, you need to know the amount of money that you need every year. So we are going to make this, we're going to change this to an annual thing. We're going to change this to annual. So every year, looking at the expense for every year, this is times 12. So every year you're going to be needing that is we are going to be needing 1 million to cater for your monthly bills and expenses, including 100k in emergencies. So depending on the currency you're dealing with, you're going to be needing this every year. So to combine the amount you need annually, total annual expense, then your total annual expense will be equal to this plus this. So you're going to be roughly needing 10 million. Going to be needing 10 million. 10 million. Going to be needing 10 million every year. So when you look at this 10 million, so after you have that you are aware that you'll be needing to get 10 million, you can go ahead and make a financial plan that will generate for you 10 million. So if you don't know how to start on that, I have another channel that I share financial information on. I'll share a simple its name and its logo. So that is the name and the logo. That's at BB Bright Finance. You can go ahead there. I talk about the different assets you can use. Here we're just talking about building this thing up. So when you go there at B Bright Finance, you'll be looking at different assets that are there, how you can divide this up to given to those assets that can generate you this income from your monthly savings, or even how you can come up on how you're going to get this annual expense covered. Thank you for watching. Please, if you haven't subscribed, consider subscribing. Also, you can go ahead and subscribe to the other channel, which is at Be Bright Finance, where I share about financial literacy that's dealing with different investment vehicles, not only in Uganda, but also other parts of the world. So as these financial investment products are everywhere. Thank you for watching. See you in the next video. Now that we have answered the first hard question and we have got our total annual expense, excluding our one-time expenses and personal goals, now it's time to try and see how can we earn this money annually. So for example, me here, I have a total annual expense of 10 million and 50,000 Ugandan shillings. That's on my calculation. I don't know how much you have in your particular currency, but for me, that's what I have. So if you're there and you have a particular business that you're running and it's giving you that particular total annual expense, you got, well and good. You're good to go. You can just make sure that you keep the operation of the business running smoothly and making sure the business is profitable through its lifetime. So unless otherwise, you can continue watching here and we see how you're going to come up with something. So I'm going to be looking at them. This is just an example. We shall see other different options that we can use to generate this money, and how we can, even if we don't have the ability right now, we shall see how to make that particular plan so that we generate that particular amount of money. So now let us see, I'm going to give you, this is a straightforward business. Those people who are in banking, banks give loans and give you an interest rate. So that interest rate, what you pay, you can use that particular interest rate to generate this money. If you have the capital that is required to generate this amount of money, you can just give out a loan to people and they give you this particular money at the end of the year. So now that's the question. So let us say, this is just an example. Let us say we are going to start that particular business. Let's say we are giving an annual interest rate. Annual interest rate. Okay, this is a percentage, remember. So let us say we are giving out small loans let's just say 0.5%, 0.1. This at 15%. Okay, it's already a percentage. So this one will be number. That's why it will be number. Just change it to that. So after writing 0.5, just come here and change it to a percentage here. Sorry, suppose click this, change it to a percentage. I've seen people issuing loans to others with a monthly interest rate of 20%. Oh, that's stealing people. So even if you go to the bank, when you go to the bank to get a loan, that interest rate is normally annual. So after calculating, after you have defined your interest rate, you are going to charge your people. Now, how much capital do you need at the rate of 15% to generate this amount? To get that capital to start your simple loan business, capital required to start that particular business we're using this as an example here would be, to get that particular amount, you would get this amount you need to be paid at the end of the year, then divide it by this interest rate, the annual interest rate. So as you can see, you require a capital of 67 million right now in order to get this 10 million. If you have to give the person this 67 million right now, and you're giving him at a 15% at the end of the year, that is today is 15 August 2027, to give you that particular amount. So this is the capital that would be required if you are to require to start this particular business. So you may be there and you have your own business idea that that can generate for you this particular amount per year, without after you have subtracted your expense and everything and financing all, maybe if you took a loan to do that, and it would be able to generate for you that particular amount of money. So this was just as an example of the particular rate of return of that particular business. So if you give at a higher rate, that will require you to pay less money. That's why giving people at 20%, you see, you'd be requiring to just a capital of 50 million. But there are different options and we're going to be looking at them. So today we looked at how we can earn this money and how much capital would it require given at a particular rate per year, guaranteed rate per year. Thank you for watching, and please consider subscribing, and also please subscribe to the other channel. Yeah, most of the investment information is available on the other channel already. So I've already posted it there, and I'll continue to add more as we continue learning this financial planning. Thank you. After answering that second question, so we are going to move on to the next thing. You know, these things just like adding on blocks and mortar when you're constructing a house. So for the annual interest rate, we are going to change this to annual return rate. Annual return rate rather than interest rate, since we were referring to the bank by then, but this is going to be our thing. Change it to annual return rate. Then we are going to change this to 16 for those in Uganda. For those in other parts of the world, we shall change this in the future, and I will tell you why. So having done that, so now that we know that we need 62 million Ugandan shillings in order to invest in something that gives us an annual return rate of 16%. So now what we are going to do, remember we have other things we didn't consider here. We are only considering monthly family bills and expenses, and annual expenses. So now here is the thing. So now we are going to cater for everything. So we are going to do here. In these things of financial planning, we have something we call short-term goals. These are short-term financial goals. Financial goal. Then we have something called medium-term financial goals. So now we have gone into finance. I'm your guy, I got you covered. So then we have long-term financial goal. Hope you're good to go. Just make sure this fits. Okay. So what is our short-term goal? We are going to consider this one-time expense with our short-term goal. So we are going to equate this to this. Okay. You're going to be looking at one-time expenses in short term. Then in the medium term, you're going to look at these other personal goals, financial goals in the medium term, and this is going to be our long term, you see, because it is too much money. And in fact, you're going to use this money, you're going to stop working and start depending on the money generated by this particular amount. So these are our particular financial goals we are going to be planning for. And first of all, we're going to be planning for the long term. Then later on, we shall figure in the medium term and short term as you require. You know what is urgent to you. I don't know how much you have there in your one-time expense and in your other personal goals, but here we're going to be first planning for the long-term financial goals. So we're going to be first planning for this. So depending on this, so this is 10 plus years. 10 plus years. No, it will depend on you. It depends on your earning. 10 plus years. Okay. Then this may range to maybe 3 or plus years. As I told you, this will depend on your earning. Then this one may be in 1 year plus. 1 year or a few months or 6 months plus. Let us say 6 months plus, no problem. Depending on your earnings. So this is the time frame. So firstly, we're going to look at the long term. Financial goal. That's what we're going to be planning for. So, and we're going to put something here called our monthly saving. This is our, okay, let us say long term long term financial plan. Long term financial plan. Okay, so we're here going to first look at our monthly savings. Monthly saving, this is towards our long term goal. Savings. So based on these monthly savings, we're going to obtain our annual savings. Annual savings. Then based on this, we are going to get the number of years. Number of years, we shall take number of years. See how financial planning interesting is. So we shall do some formatting as usual. We shall add a bottom and we shall make it bold. Okay, so I don't know how much you're saving monthly. Let me just give, maybe you're saving 200,000 towards your long-term financial goal. So you're supposed to divide your monthly savings into different categories. I have short-term, medium-term, and long-term. But here you're planning for the long-term. So let me say you are saving 200 for the long-term. 1, 2, 3. So that is 200,000. So that means you shall get this times 12 to get your annual saving towards your long-term goal. So how many years will it take you to reach your long-term goal, which is got to get is going to equal to this. Remember, this is our long-term. Divide by this. So as you can see, if you're saving only 200,000 Ugandan shillings, I don't know how much you have there in your particular currency, and you are investing, okay, let's first look at the amount. Let us first leave on the annual return rate, and you're saving 200,000 Ugandan shillings. It will take you 26 years to reach that particular target. 26 years to reach that particular target. So the more you save, the more you bring your short-term goal closer. So let's say you are saving 300,000. 1, 2, 3. See, it will take you less years. So this is 17. So let us keep it at 200. I don't know. It will depend on your your monthly income. So if you have, if they say if you're saving maybe 50, 1, 2, 3, it will take you 105 years. This is very bad. So that means you need to change something. We pray that God opens doors for you so that you can save more. If you're saving 50 and you are having this, probably if you are saving 50, your bills will not be like this. Something would be less in your bills. So let us keep it at 200. 1, 2, 3. 200. So it will take, if you're saving 200,000 shillings per month towards your long-term goal, it will take you 26 what? 26 years to achieve them. So I'll simply copy this down. Just do copy. Let me just copy everything down here and just change. Just paste text only. Then I'll copy the formatting here and paste it here with paste special formats. That we are quick. So this is going to be our medium term. Medium term. So our monthly saving for the medium term, let us first leave it that. So remember, we shall get this times 12 to get our annual savings. Then we shall get number of years that it will take us. Remember, we are in the medium term. This divide by this. So if you're also saving 200,000 towards our medium term goals, as you can see, it will take us 4 years if you're saving this into our medium term financial category. So let us move on to the next one, which is going to be short term. I need to copy all of this, sorry. Okay, we are good to go. Need to paste only numbers, and we are going to change this to short term. Short term. So similar, I'm going to copy this and we paste the formats here with paste special. I need only the formats. So let us say we are doing the same 200, and in order to get this, we shall get our short-term goal divide by our this. So it will take us 2 years to achieve this. Actually, it's supposed to be 6 months plus, not 6 years. 6 months plus. Okay, so as you can see, so if we need to meet our targets, and of course we have different earning capabilities. As you can see, long term, if you're saving this towards this will give us a total monthly saving of about 600. So let us say maybe you're living on a tight budget and you're trying to save more, and you have to meet your particular financial goals. So we'll have just to adjust this to see that you meet your targets. So let me say you change this, you start saving 250, 1, 2, 3. As you can see, it changes to 21 years. Before they were 26, and maybe say if you have the capability, you increase this to 200, and this it changes to 4 years. Then maybe you say for this short term, you need them done quickly, increase on that. So it will be in 2 years. So basically we have seen how much we need to save monthly and how long it will take us to achieve these particular goals in the different categories. That is short-term goals, medium-term goals, then the long-term goals. So basically we have looked at this. Then based on these things, where in the next video, or you can go along and check the other account I shared with you earlier on, some of these things about investing already there. We shall see how we can optimize our financial plan, so that we can even reach these particular goals in a few years less. You see, for example, this long-term goal is 21 years. See, we can squeeze it like up to 18, maybe to 17. Then this one for medium term is at 4, and see how we can squeeze it to around maybe 3.5. Then this one is done. So how we can reduce this to maybe 1.5 or 1.5 years. So like that. So if you haven't subscribed, please subscribe to support the channel. Thank you for watching, and once again, you can move on to the other channel and also subscribe to it. Some investment information is already shared on that particular channel. You can go ahead and review it. So we shall meet in the next video. Thank you. So welcome back, my people, to this last video of this financial planning series. So as you can see, we managed to make our long financial term of saving 250 for 21 years to meet our long term financial goal, then 4 years for the medium term, then and 2 years for the short term. So depending on your plan there you have, this is just an example. Maybe on your financial plan you have different figures there. Maybe yours may not be 21 years, maybe 15. Then for the medium term, maybe 3. Then for the short term, maybe 1 year. So this is just going to be looking at how we can shorten that period. So you remember, when you're getting this money monthly, you have different options, either to keep it in your regular account or a savings account, or put it in any particular asset that will give you a small return per month. So I just change this so that we get going. Let's change this to that. So let us say we have our, this is just a brief example, say monthly savings. Monthly savings. So we are looking at the first month. This is our first month of saving, 250. This is our 250,000. So if you are putting it in a savings account, in a regular savings account, at the end of the month it would be 250. But if we are putting it in an account that pure, is it, I don't know, different banks have the way they name their particular different accounts that offer some interest at the end of the month or at the end of the year after reaching some particular amount. Actually, it's not automatic. Maybe they will say, maybe if you have 100,000 on your account, then you start earning interest. So, and this normally in my country, this interest normally, annual interest range range from maybe 3.5, 0.035. This is per year. Then per month, monthly interest. Monthly interest will equal to this year divide by 12. The interest rate for the year divide by 12. We shall change this to percentages, and we make it two double decimal places. So if we're looking at let's say for the first month, so just here considering only 1 month, remember there's the compounding effect. Remember, in the next month you'll add 250 to make it 500, so it would have to compound with the interest you earn today. So at the end of that month, let's say you have put it at the end of the first month, that is 31st, for example. At the end of August, for example, today is 18th. So at 31st August, you put this 250 on your account. Let's say this is 31st August 2026. So on this date, you put 250. You're 250. 1, 1, 2, 3. So on first, let us say 1st of September 2026. Remember, they are giving a small interest, a small monthly interest of this. So at the end of that period, you will have 1 plus this monthly interest times the deposit you made at the start of the month, which will be, this is supposed to be, actually not supposed to be 1st October, because it has to run for the full month of September. So at the end of September, you'll have gained some interest. Remember, this is compounding. So if you continue saving like this, then in the next month, let us say again on 31st. I don't know if October ends on 31st. So I'm just here saying maybe 30 October 2026. Remember, now you're going to have is equal to this monthly saving plus the closing balance of that month. As you can see, there's some interest add on it. So on the month of is it December 1st 2026, you'll be having this once again plus 1 plus this monthly interest. So as you can see, the money keeps on compounding slowly by slowly. So at the end of the year, if you had kept your money in a regular savings account, you would not receive this interest. Your money will remain 250, and it will be a total of all those particular additional sums you have added. So as you can see, these are 2 months, but there's extra 2,000. So imagine if this money was adding up every month at the end of every month. So at the end of the year, you'll be having some good money out of it. For example, let us say we have only kept 250 for that full. We deposited 250 and stopped there. 1, 2, 3. So 250. So at the end of the year, we shall have one. Plus the annual interest rate, which is this, then times our saving. So this is more finance, and normally we talk more finance on the other account. So at the end of the year, if you decided to put 250 today in a regular savings account that pays 3.5% per annum, you would get 258,750. That means your money made some it once. So if you keep this money in a regular savings account, you'll be able to make some profit on that account. That means you reach your goal in a short term, not more than those particular. Remember, this money is compounding. So we shall be looking at this investment account, this investment planning on the other finance account that is at Be Bright Finance, as you're seeing there on the screen. At Be Bright Finance, you can go there and follow. We shall be seeing on how we can do with investment so that we meet our targets earlier on. So if, for example, there are products that offer of up to 10% interest rate, let's say 11%. So as you can see, at the end of the year, you have accumulated some good money. Rather than having 250 on your account, you'll be having 277 something at the end of the year, which is good. So we shall be talking more of this one. This is more of investment. We shall be looking at it from the at Be Bright Finance. We shall be talking about investment options, where we shall be looking at different products you can use to meet your goals, both long term, short term, and medium term, even shorter than the period you had financially planned for. So if you haven't subscribed, go ahead, subscribe to the channel. I'll see you in the next series on this particular channel. Then for the investment one, we shall be continuing on the other channel of Be Bright Finance, where we talk about investment. Thank you for watching.